Good morning, friends. Today we are going to discuss functions of money market, components of Indian money market, structure of Indian money market, etc. Today in our lesson, we will discuss these three areas of our syllabi. First one, that is functions of money market. Functions of money market means money market discharge many functions in order to ensure the smooth functioning of or smooth running of our Indian financial system, particularly for short-term fund based. There are different functions as far as money market is concerned in our Indian financial system. First one, it helps for a rapid economic development through provision of or providing short-term funds to the industrial people or other sectors. That helps to pump the finance to the needy people, particularly practicing in industry or other sector. It helps for rapid economic development. Another function that is, it helps for that's provide mechanism to achieve the equilibrium between demand and supply of short-term funds. Money market helps to link between the needy people and those people have enough funds for short-term finance in such a way that helps to achieve the equilibrium between demand and supply of short-term funds. The next one, it facilitates effective implementation of RBI monetary policy. We know that RBI has published a lot of monetary policies. It may be related to the money market or secondary market or capital market or whatever means. Money market helps for implementation of the RBI monetary policy in an effective way. Money market also provides ample avenues or opportunities for short-term funds with a reasonable return on funds. It helps for commercial banks to maintain financial discipline in the financial system. It also provides short-term fund for needy people. Another important one, that is capital formation. We know capital formation means it helps for mobilizing savings from those people have enough fund to the needy people in such a way that enhances the capital formation. Then money market made possible through interbank transaction and money market instrument. By discharging different avenues or different sources of finance, it helps for employment generation. Only because of it, money market helps for pumping finance to the industry and people who want to invest in some other sectors. Automatically, it directly or indirectly helps for generation of employment opportunities. Then many functions we have as far as the money market is concerned. For important one, that is helps for inflation. It helps for controlling inflation. Money market helps for controlling inflation through interest rate or providing short-term finance, etc. Then it also provide fund to the government to meet its deficits. Then it helps to get a wide range of savings instrument to select from and invest their savings. Again, and money market helps for the development of non-banking financial institution also. Next area, that is components of Indian money market. We know that money market is the market for short-term funds. Automatically, it helps to meet the short-term requirements of the people or banks or financial institutions, firms, companies, etc. This money market is generally ranging from, the period of maturity is ranging from overnight to a year. That is why this development of money market is a very prerequisite, or it is essential for the growth and development of our Indian financial system or economy of our country. The main components of Indian money market consist of three things. First one, organized money market. Second one, unorganized money market. And third one, that is sub-market. Let us see one by one in detail. Organized money market. We know organized money market is the market which have an organized structure, which is controlled by RBI, which is governed by RBI. These markets have some standardized and systematic procedures, rules and regulations to govern the financial dealings. These markets consist of Reserve Bank of India and other financial institution specialized in the banking or non-banking financial institution, quasi-government bodies, etc. Then another one, that is unorganized money market. From the term itself, it is very clear. Unorganized money market consists of, it does not have any organized structure, rules and regulations, systematic procedure, nothing. It is consists of indigenous bankers and money lenders. They are collecting their deposits and lend money to the needy people. These are certain private financial institutions or companies, so that Reserve Bank of India has taken n number of measures to regulate this kind of institution and try to bring this institution in the organized sectors. The next one, that is sub-market. Sub-market consists of call money market, bill market, etc. Bill market, we know, bill market is that consists of commercial bill market, treasury bill market, certificate of deposits, and commercial paper, etc. So these three components, or organized money market, or unorganized money market, and sub-market, consist of our Indian money market. Okay. Next, that is structure of Indian money market. We are already discussed the main components of Indian money market. While we are discussing the structure of Indian money market, that consists of, we know, organized banking sector and unorganized banking sector are the main components of our Indian money market. The main components of Indian money markets is unorganized banking sector and organized banking sector and sub-market. All these things we are discussed in our previous slides. They are doing their functions by lending and receiving money for short-term settlement. We know organized banking sector is a sector which is under the strict direct control of RBI. Whereas unorganized banking sector that consists of indigenous bankers, money lenders. These two things are coming under the purview or coming under the category of unorganized banking sector. They are doing their business on traditional lines. Even though they are doing their business in a bulk quantity. Let us see first one, that is indigenous bankers. They are not bankers. They are doing banking business as a what we say that side business. Examples of these indigenous bankers, merchant bankers of England. They are mainly operates in small villages or towns or semi-urban areas or rural areas. RBI defined indigenous banking industry means a person or an individual or a private firm receiving deposit and dealing in hundis or lending money. They accept a deposit on current account and fixed deposit. They lend money to the small farmers or traders. The important thing that they charge an extraordinary or what we say that exorbitant rate of interest for their lending. Some communities like Marwaris, Bengalis, Chettiars are doing this business. Kurchi, Brahmins, etc. do indigenous banking business in India. The main drawback or limitation of this indigenous banker is that they always follow conservative practices, and these indigenous bankers are not controlled or governed by the Reserve Bank of India directly. The next one, that is money lenders. We know same as indigenous bankers, money lenders are not banking industry, but they are doing the practice of lending money. The main difference between indigenous bankers and money lenders, indigenous bankers are ready or they are receiving deposits from the public and lending money to the farmers or needy people. Whereas money lenders, they are lending money without accepting deposits from the public. They are lending out of their own amount or fund. They are also charged an exorbitant rate of interest for the advances given by them. Money lenders are lending for consumption and other domestic purposes. Actually, they are not bankers. There are two categories of money lenders: professional money lenders and non-professional money lenders. We know that the professional money lenders are those money lenders whose main business is to lend money, whereas non-professional money lenders are those persons who combine money lending with other activities. or they are doing this as a side business. Professional money lenders are doing the business or doing the lending process practice as a main business. There are two kind of professional money lenders in India, that is resident money lenders and itinerant money lenders. And examples we are listed. Resident money lenders are Maharaja, Sahukas, Seths or Banians. Itinerant money lenders are Pathans, Kabulites and Quatswalas. So these are all the details regarding unorganized money market. The main drawback of these unorganized money markets is, we are discussed, they charged an exorbitant or extraordinary interest to their advances. Another important limitation, that is, money lenders or indigenous bankers, they are somewhat they are accepted their deposit and lend money to the needy people, but the limited amount they have to lend, they can't satisfy or they can't lend money to the requirements of rural people. Then another one, that is, they are mainly lend money to the consumption or we are discussed domestic purposes. It's not a productive process of lending money. It's main drawback of unorganized banking sector. Again, unorganized money or banking sector grant loan against crops. They compel the customers or consumers to supply the crops to him. So these are all the important limitations we can see as a part of this discussion. Then we move to the organized banking sector. We know organized banking sector consists of Reserve Bank of India, State Bank of India and its subsidiaries, nationalized banks, joint stock banks, commercial banks, rural development banks, regional rural banks, and some other commercial banks, some other special financial institutions like Life Insurance Corporation, Unity Trust of India (UTI), Industrial Development Bank of India (IDBI), State Financial Corporation (SFCs), and NABARD, etc. Again, Exim Banks, Discount Finance House of India, etc. are constitute our organized banking sector. We know organized banking sector means those financial institutions which are operated their banking business under the strict control of Reserve Bank of India and Government of India. So RBI is the leader of Indian money market. We know that Reserve Bank of India is the central bank and monetary authority of India. So these institutions discharge the function of organized banking sector. Then look into the participants in money market. We know there are two parties, they are actively participate in money market. We can say that two extremes of our money market system. First one starting and another one ending. Beginning end and lasting end. That is, we can say that lenders and borrowers. We know it is very clear. Lenders means are the entities or starting point with surplus funds. Lenders may be banks, commercial banks or cooperative banks or private banks, mutual funds, corporate entities. They are ready to give loans and advances to the another extreme. Then another important participant in the money market, that is borrower. We know is the end portion of our money market system or money market structure. Borrower is the entity with deficit funds. They are needy persons. They want advances from the lenders. In such a way, these two are the two extreme of our money market. So we can say that lenders and borrowers are the main participant in money market. Over and above, government, Reserve Bank of India, discount financing house of India, mutual funds, financial institutions, public sector units, provident funds, and other non-banking financial companies or institutions are the major players in the money market. Reserve Bank of India has become more independent, same as SEBI, Securities and Exchange Board of India. As in the case of insurance, IRDA, Insurance Regulatory and Development Authority, become important institution. They are the main players in our Indian money market. Government, Reserve Bank of India, DFHI, non-banking companies, primary dealers, securities, public sector are the major players in our money market. So by this, let us conclude this session here. Now next video regarding Reserve Bank of India and its functions. Thank you all.